Hello, my name is John Colley and I am the 6 Minute Strategist. Welcome to this KYVC, Know Your Venture Capitalist course. How to win at the venture capital game by knowing more about them than they know about you. Venture capital investment is a complex area, and it's important that you're as well briefed as you can be before you start any investment process with a venture capitalist. Now, it's not a level playing field, you have to understand this, but I want to use my experience and share this with you through this video course to try to level up the playing field so that you're better prepared and you can end up with a better result. In this episode, I want to talk about fixed-term funds. VCs typically raise 10-year funds from their investors. Now, when they come to invest those funds, they classically do it over 3 phases. In the first phase, which is years 1 to 4, they are investing, and they're investing in new companies and they're looking for opportunities. In the middle phase, typically 5 to 8 years through, they may well still have funds to invest, but they'll be investing them in their existing platform companies. And at the back end of this, years 8 to 10, they will be looking to realise their investments and return money to shareholders. As VCs go through the life cycle of the fund, they will typically hold an investment for between 3 to 5 years, sometimes it's as long as 7 years. But they will be looking to realise investments successfully so that they can return money to their shareholders and demonstrate a strong track record. And this is very important because after about year 7 or 8, they will then be looking to raise the next follow-on fund. And to do that, they need to have a strong track record with their investors of having made successful investments and made very good returns, and the shareholders have got the money back. Why is this important? You need to understand how the VCs have got their funds set up so that you can be absolutely certain that the fund that you're actually talking to, the VC that you're talking to, is qualified and has got the right sort of fund to invest in your company. Because if he hasn't, you can go and have a very nice meeting with him and it'll be a complete waste of time. Here, you need to understand how much money the VC has got in his fund that is available to invest in new companies. Now, this will be partly a function of how old the fund is, so you need to ask him that as well. You know, when did you raise your fund? How much money have you got left to invest in new companies? Because unless you know the answer to that question, you won't know whether he's able to invest in your company. And as you'll see further on in my course, there may be very good reasons why he's having the meeting with you, which are all driven by his motives and nothing to do with his interest in investing in your company. In the next episode, we're going to look at equity checks. I hope this video has enabled you to take another step forward and know more about the VCs than they know about you. Please come over to my website at jbdcolley.com, the 6 Minute Strategist blog, and join the community by subscribing to the mailing list. I look forward to seeing you in the next video.